Now this is a quick scalp trade on gold. This very trade gave about 244 pips, which gave about 4 RR, meaning whatever you are risking, you're gonna make times 4 of that amount you are risking. Now this is another quick scalp. This very trade gave about 249 pips, and it's about 4.4 RR. Now this is another buy right here. This very buy now gave about 269 pips, and it gave about 4.1 RR. Now this is another buy I took. This one gave about 310 pips, and it was about 6.7 RR. Now all of this, they are quick scalp trade on gold. And in this very video, guys, I'm going to teach you the best gold scalping strategy. With this very strategy, even if you don't win all your trades, but with the way I'm going to teach you, with the plan I'm going to give you, you're going to definitely start making profits every single time. And this is a scalping strategy, meaning you can take up to 3 trades a day. And out of that 2 trades, you're going to definitely win one of those trades. And even if you lose other trades, you're going to definitely end that day in profit. If you're risking 10% of your account or 1% of your account, you're going to definitely end that day in about 3% if you're risking 1%, or you're going to end it at about 30% if you're risking 10% of your capital. Now, I'm not going to waste time, right? Let me begin. Now, this strategy is a very simple strategy, and it's something that can easily make you constantly profitable. Strategy does not work 100% of the time, right? Note that and then have that at the back of your mind. Now, this is the whole idea of the strategy. This strategy is you following who is in charge of the market. First, you are following who is in charge. If buyers are in charge, you are following buyers, right? You are following the trend. Remember, trend is always your friend. Always follow the trend. If buyers are in charge and you are selling, you will keep hitting stop loss. Now, first, you want to identify who is in charge of this very market. Is it buyers or is it sellers? Then the second thing is now going to be, where will I be joining this very trend? Where will I be joining these very buyers? So these are the two things with the strategy. The first one is the trend, to know my direction. And what do I use? I use the break of structure. Once the price have a high, breaks above that high, this is a high, and the price broke above it, that's a break of structure. Let me show you quickly on the chart, so you can see it on the chart and let's see how it looks on the chart. Now quickly, this is a high, you can see a high right here, and what happened? Price broke above it, price went up and go higher, broke above it, that's a break of structure. And if you watch, this is a break of structure to the upside, showing you that buyers are the ones in charge of this very market. So on this very market now, what do you think I'll be doing? I'll be buying. Why? Because it broke structure to the upside. Now, where will I be buying from? It's gonna be this low. This is like a demand zone. The strategy I do call it the order block. So this is an order block where you'll be entering the buy. Now, what do you expect? You expect price to come back to that very zone and then start buying from that very zone. So this is an order block, is a demand zone. But we need that demand zone. I do mark out an order block at that zone. Now, quickly, this is just all about the strategy. Now, the third thing you're gonna need, right, is just to have a little bit of liquidity protecting that very zone, right? This liquidity now is like a low protecting this your order block which you want to buy from. Now that low is going to provide the liquidity needed. It's like a trap that's going to provide liquidity for this movement to happen. Gold respect order blocks most of the time, right? But it's going to need to take out a low. Like this is a low where you're buying from. This is a point I'm buying from, this order block, this demand zone. I'm buying from this very demand zone, but I'm going to need this low protecting this demand zone. Why is that important? If there is no low protecting it, the price will tend to come down to take out this zone, meaning you likely get stopped out. And you know, gold always look for liquidity. So once you get stopped out, it will start moving. So you want to make sure if there's no low protecting this very low, meaning I'll look for another order block below that very low. Right. So with this in mind, let's go to the charts and let me show you something. Now, this is a nice example. Now, order blocks can either be long wicks. If you have a point where there is a long wick, you can mark out that long wick as your order block. If there's no long wick, order block, they are the last candle before a push, either to the upside or to the downside. Now, in this case, now this is the last candle right here. Let me zoom out so you can see. This is the last black candle. Right? My chart is black and blue. Your own can be any color. So this is the last black candle right here before the price started going up. So I'm going to mark out that full candle from the top of the candle to the bottom, and then that's the order block. Notice that's where the price came to and then started buying from, right? So this is an order block. Overall, in a case where there's a long wick, in this case now this is a long wick right here. So I'm going to mark out from the beginning of the week to the end of the week. So this is what we call order block, right? So this is where I'll be taking my trade from. Now, first thing with the strategy, I want to first know who is in charge of this very market. Is it buyers or sellers? This is a high, a point the price had been to and came down, created this very order block. Now what happened? Price went up and then broke above that very high. This is a break of structure showing me that buyers are the ones in charge of this very market. Meaning, if I'm buying, I'm doing the right thing, right? Now what's gonna happen again? I need my liquidity, and you can notice a low. This is a low which can provide liquidity needed for this very order block, and that was how I took this very first buy, hitting full take profit. Now notice another one. This one did not hold. Right, notice this other one. This one did not hold. This is a break of structure showing that buyers are still in charge of this very market. Right now, I want to take a buy, and remember the last candle before the push to the upside or the push to the downside is the order block. Now, if I mark out this very box now as my order blocks, I do use my box to mark out the order block, and I take my buy from that very zone. If I have my stop loss below this very zone now, I'll get stopped out. If you notice, I got stopped out before the price finally went up to take profit. Why? Because no low was protecting this very order block. This low now was not a clear low. It should be a low protecting that very order block. A low like this. That's going to make it more valid. Sometimes the price will not have a low and it will still respect that order block. But having that low is going to give you more confidence that, okay, this is a nice zone for me to buy. Right? This is a good zone, a perfect zone for me to take my buy from. Now, what happened? Price took you out before eventually started going up. Now, if you are taking trades from these very order blocks, what you do, you take your long or short position too. You take your buy from the very beginning of the order block. Then your stop loss is going to be below the order block. Make sure your stop loss is below the order block, not at the middle, below the order block you marked out. Then you can always target the next high as your take profit or the next order block. So notice this, in this case now, this is an order block because this is the last candle before the price started going down. So I can mark out that candle as the order block. So I can target this very order block as my take profit. Now, what do you expect? You expect price to get to that very order block at this very zone. Now, how do you now go over? No, okay, this is a zone I can easily still sell from because it's an order block. Now, watch. This low now is not a break of structure, but rather is the liquidity protecting this very order block. So I won't be selling, but rather I'll be buying. So I'll be looking for more buys. As the price is going up now, I'll be looking for more buys as it's going up. Now, notice another one. I took this very buy as well. This is a long wick, and the long wick can act as an order block. And what's happening right here? This low is acting as the liquidity needed. Then, if you watch, obviously it's breaking structure. This is a high, which it broke. Now, what will happen? I'm buying from this very order block, targeting this high as my take profit, and that for RRO over 200 pips. So, pretty much a decent strategy with a decent reward. With this very trade now, if you were risking about $1,000, you're gonna make $4,000. If you're risking about $100, you're gonna make $400. If you are risking about $10, you're gonna make $40 for RRO on this very trade. Now, multiple opportunity I had. This is also a buy I took personally myself, and also I have a trading community, a free Telegram group where I drop trades for free. Right? It's 100% free. I just try to help traders who are not good with the technical analysis and then take my signals, and it's 100% free. The link will be in the description. You can click on the link to join. So this is it. This is the group where we had wins and losses sometimes. Now, this long wick now is the order block, and if you watch this low, you can see a low which acted as the liquidity protecting it. I took this very buy personally. It gave me about 7 RR, right? 7 rigs to reward on over 300 pips. Now, this was when I personally had the setup. Many of the setup I'm showing you on the chart, right, that trade I took personally. So these are things you want to look out for with this strategy. Once you have those things present, then you can easily go over, take those trades. Now watch, when I had the setup, it was even few days ago, right? It was just a few days ago. And if you notice, multiple opportunity I do take, multiple setup I do drop for the community right here. The link will be in the description. Click on the link and you will be joining the free Telegram. And now this was when I had the setup right here on that gold buy. I'll notice when it hit full take profit on this very trade right here. Now let me show you another one. This was now for a sell. Same thing. Order block now is the last candle before the price started going down, and in this case, this very blue candle right here is the order block. Now what happened? It broke this low as a break of structure to the downside, showing you that sellers are the ones in charge. So what happened? This high acted as a liquidity protecting this very order block. So what happened? Taking myself from the order block to the downside, expect the price to take out this very low as another break of structure. Now There are some other things with this very strategy. This is the whole idea of the strategy. Those things I just gave you. There are some other things with this very strategy. Now, at some point, the price will reverse. You are buying. At some point, it will reverse. Buy will no longer work. Then selling will now start working. Right, at this point now, buying, if you take a buy from maybe around here, it will not work. Right? But selling will work. So at this point now, there's something we call a change of character. And also it got to a possible reversal zone, which are all of these things I teach in my mentorship class. So I have a mentorship class where I teach students how I trade. I teach them this very strategy, how I use it, every single thing I do, right? And if you want this other buy right here, I also caught it. I also took this very buy. Let me show you real quick so you can really see what I'm saying. Notice when I had the setup right here, right, all of these trades, I took them, and that's why I'm able to show you this. It's a quick scalping strategy, and it's a decent strategy. Now watch. You can see when I had the buy from that same long wick as an order block, I took my buy right here hitting. I took my profit out. Now watch, a long wick as an order block. This low acted as liquidity. I took my buy. Now multiple buy opportunity presents itself. You are scalping. You can always check them out. So basically, this is the whole idea of this very strategy. So if you wish to learn everything about the strategy, right, join my mentorship class and I'll teach you everything. And the link to join is in the description of this very video. To join is about $40. Then if you want a one-on-one section on how I catch all of these trades, how I take all of these trades, you can also request for a one-on-one section. Click on the link in the description and then you can go for one-on-one. So is this all helpful? Like the video and I will see you guys in the very next video.